let's connect with the management of Polycab. We have Mr. Inder Jain Singhani, who is the chairman and managing director of the company, as well as Gandharv Tongia, who is the executive director and CFO at Polycab India. Thank you so much, gentlemen, and thank you for patiently waiting by. A very good morning to you. And first, let's talk about your earnings straightforward. You've actually seen good growth in revenue in the quarter gone by, but there has been a decline in EBITDA as well as in your PAT number. If you could shed some light on what are the factors that contributed to this, what actually impacted your PAT and EBITDA in the quarter gone by and improved your revenues.
You're right. This was the best ever first quarter performance by our company. We did almost 4,700 crore rupees of top line, which translates to almost 21% of year-on-year growth. All the business vertical registered a robust growth. Cable and wire registered growth of almost 11%. FMEG business also grew significantly, and EPC business, with the help of RDSS project, has registered a phenomenal growth. The margin, which you rightly pointed out, has decreased a bit at EBITDA level. That's mainly because of change in the mix. The EPC business, which is historically a lower margin business, has contributed significantly to our top line, as well as there's a mixed change in cable and wire. The exports registered a bit of a degrowth, and that's the reason why the EBITDA margin was close to 12.8%. And that is within the guided range of 12 to 14%. And we believe in the quarters to come, we should be able to maintain and improve on EBITDA margins.
All right. Hi, gentlemen. A very good morning. This is Shrishti also joining in. And Gandharv, I want to come back to you because there has been a shift towards the lower margin business segments this particular quarter. But do you expect to maintain the current revenue mix? And how will this impact the margins going forward? An understanding over there.
We believe the mix should improve in the coming quarters. In this particular quarter, there was a fair amount of volatility in the copper prices. And whenever you have such volatility, in general, there is a negative impact on channel sales, which is what we witnessed in the month of June. The volatility, if it continues to, if it improves a bit, we believe that we should be able to go back to our regular mix. Having said that, I think 12 to 14% of EBITDA margin range is what we believe we should be able to maintain. Another important thing which we need to note is the last year was a great run for the company. We had registered almost 30 to 40% volume growth. The revenue of top of the company increased from 14,000 crore rupees to 18,000 crore rupees. And that is where we are comparing this current year or current quarter performance against a very good, very solid base quarter performance.
Right. Y'all are also earlier said that y'all are aiming to reach about 10% export revenue contribution by FY26. But this quarter, you have already seen a decline to actually 5.3% versus the earlier 8%. Is your previous target of what you were expecting for export is still intact? If you could explain to us what sort of strategies would you implement to increase the export revenue contribution going ahead?
Yeah, our export is this last quarter was a little lesser, but we are focusing on all kind of EPC contract of the world, and we are doing now division EPC contractor separately, distributor separately, OEM separately, and continuous our team is doing good efforts. But coming quarters and coming years, our export will be continue to increase.
But Gandharv, I want to take that point forward with you. Given the demand scenario, what is the overall outlook for your revenues as well as EBITDA margin for FY25? What kind of numbers we should expect in there?
So, we had embarked on a transformation journey in fiscal 21. And at that stage, we thought that achieving a top line of 20,000 crore rupees by fiscal 26 would be a great achievement. Last year, in fiscal 24, we exited with a top line of 18,000 crore rupees. We are working on our midterm guidance, and during the current fiscal, we should be able to release that to our investors. Having said that, we believe that we will continue to grow at a rate which is going to be better than the industry growth rate, and we will be able to maintain or improve our EBITDA margins in the coming quarters.
All right, if you could tell us what is the domestic demand environment looking like right now? Do you see your market share actually growing from the current levels of about 27 odd percent?
Yeah, local market, domestic market is growing fast, but because of little bit this last election, after that this market is buying power is because of commodities going up and down. So that stockist is reducing their stock, but within a month and so, I think so it will going to pick up a very good because demand is good actually. Overall demand is good because all government tenders are online, projects are on the line. So demand is good. So coming time, I think so sale will be, revenue is going to be good.
All right, and lastly, Gandharv, there has been a slight decline in your advertisement and promotional spends for this particular quarter. But going ahead, what kind of an A&P spends are you targeting for the full year of FY25?
So we continue to operate within the guided range of 3 to 5% of A&P spend of our B2C revenue. In general, the first quarter is soft as far as the A&P spend is concerned. And as we progress in the fiscal, every quarter, we should be able to go back to our original range of 3 to 5% of B2C revenue. The other important thing is CapEx. We are very confident of the demand trajectory, and we are investing heavily in our CapEx. Almost 1,100 crore rupees is the capex outflow, which we have estimated for the current fiscal. And in the first quarter, we have incurred close to 280 crore rupees. So we are on track to have additional capacities available to meet the
All right, then, gentlemen, we leave it there. Thank you so much for joining us on ET Now to talk about the earnings gone by for Polycab, as well as your expectations going ahead for the margins, as well as the export growth going ahead. All the best for that and the next few quarters for the company.